Here we go, producer price index. Let's see what we got here. All right, so gold initially spiking higher. Dollar index is down. Let's see, what kind of move is that on the dollar index? Nothing super substantial. Gold popping slightly. S&P is up. Euro also moving slightly higher. Again, not a remarkably big move here, but we'll take a closer look, see if we have the numbers in front of us. Okay, so core wow, look at this. So producer price index month over month came in as expected, but the core PPI came in lower than expected. This, again, I would say, supports the overall disinflation consensus, which is already in place. Let's be clear about something. Markets are already expecting disinflation. However, this is more good news, but you have to be careful because it's actually kind of in some ways bad news. It's confusing, but let me try and break this down. We want inflation to cool, but we don't want it to cool too much, because if inflation signs are like rapidly cooling and jobs numbers are worsening rapidly, if that happens, then you can start to get concerned about recession side of things. But I don't think that we're there. I mean, this is a cooling number here today for producer price index on the core side. That is a good number. That's a good print for right now what the market wants to see. And when I say the market, I'm talking specifically like equities and S&P and stuff. Same with gold. These markets, the two downside here and the euro, if they're going to strengthen, they want to see the dollar weaken off of the back of more cooling inflation. So gold is making a push higher. We're at 1986. I mean, still, this is kind of an embarrassingly low price compared to that pop that we got last week, right? But still, this is a good start. Let's take a look at the daily chart for gold. Again, doesn't really break out of this kind of disappointing price action here recently. I think that if you're a gold bull, you'll probably look to the Fed meeting later to see if we get any pops and breaks above. This is probably good for my pound dollar position. So I am, as I mentioned, I am long pound USD at support here. And so far it's looking it's looking pretty flat. I'm slightly in the red at this point. I think we have room to squeeze higher on the pound USD. And unless you get something incredibly hawkish from the Fed today, I think the dollar downtrend is still intact.
CPI and PPI, or all the economic news that we had this week, they all point the weakness of the dollar. So it's obviously, I see the slowdown of the dollar, which is good. So I think today, obviously, they're not going to increase the rates, but on the conference side, I hope Powell will maybe mention about rate cuts or something like that. That will be good for the market.
Yeah, and you know, to your point about dollar weakness, it's been you know, actually kind of an interesting one this week, because what we've got here, this is the daily chart, and despite what, you know, you could argue is kind of cooling inflation data, it's somewhat muted in terms of price action response, just because this is kind of what the market has been calling for. But what do you think, Kenzo, gets us to roll over here? If you know, you and I are kind of in the dollar bearish camp, what gets us to break out there? Is it purely just a technical delayed reaction to all the fundamentals this week, or are the markets just waiting to see what the Fed has to say before making a move?
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Yes, I think the good thing here, everyone's just waiting for the conclusion. From CPI, from NFP, the best conclusion is going to be FOMC. So I'm hoping for good news. Maybe that will happen. And if maybe they go into, let's say, obviously, I think they're going to post the rates, But any clue about cutting the rate sometime along the way next year, that will be a good thing, and we might start to see a continuation of the sell. I think technically the structure actually is telling us that we are on a downtrend, but you can see that we lack a push. We need some push, some momentum to push the market to continue. Unless if he say whatever you want to say, I don't really see it pushing aggressively high. If it does, maybe it will end up coming back again, because interest rates is another thing. Yes, they control the market here and there, but 90% of the economic news, they all point down. They show the cool off of the economy. PPI producer index, it shows that things are not going as fast as before. So obviously retail sale is not going to be good. CPI, we saw a slowdown, even though we had the other one went up with a 1 point, but that is not really crazy, or maybe it won't make anyone to panic. That's why the market did not really move that bad. Another thing you saw on the indexes, you saw like Nasdaq, US 30s, they were all enjoying CPI. Obviously, they're expecting something to happen because they enjoy lower interest rates. So obviously, they expect the market to go even lower. And that's, I think, it might happen. I think today it might be a very good time for us to start with a very nice trend.
Yeah, and I think, Kenzo, another thing that's worth mentioning is that when we see these inflation numbers coming in cool, you had CPI yesterday, came in at, it came down, but it didn't come down. Some people were hoping for like 2.9, that sort of thing. I think in some ways the market is actually okay with this slow cooling, because it does start to, we've talked about this many times, but at what point does bad news, which, is arguably economic, cool downs, at what point is bad news bad news? And I think that, if you get cooling inflation that's very mild cooling, that is not necessarily devastating to the market, right? So mild cooling allows the Fed to take off their foot off the gas and pump the brakes a little bit on all the rate hike stuff, and perhaps even look to move further out of the picture. So I think that, this inflation number was just right. I mean, we had jobs numbers that were relatively strong last week. You have inflation cooling in line with expectations. That's an environment where stocks seem to do just fine. You also have, of course, packed onto that, and probably worth mentioning, that fourth quarter bullish seasonality in a fourth term of a presidential election. I was pointing that out earlier in the show. You add those things together, I think you have a good rally to the end of the year. I've been very, very clear about that. You and I have talked a lot about that, Kenzo. I know you've been predominantly bullish on indices as well. So I think that for now, the case for higher equities markets is still intact. And I think, perhaps there's a little bit more of a battleground as you go into the new year and we get more live Fed meetings, right? Because right now, Kenzo, expectations of the Fed today are to do nothing and to probably try and sound a little bit hawkish, but most likely, what I think the bulls need, if you want to get more squeeze on the indices and gold, if you want to see gold here rally today, if you want to see the indices rally today beyond what they've already done, you need something meaningful. Because look at this market. The Nasdaq is up tremendously high. S&P is up tremendously high. Gold, not so much. But the point is, in order for you to get a good size, continued push higher on all of these things, what you probably want to see is the Fed solidly say that rate hikes are done. And they're probably not going to say that. So again, that is, I think, the game plan here for today's meeting.
Companies which are in Nasdaq, Amazon, Teslas, they were not actually performing very well. Some they missed their estimates, but there is this move pushing to the upside. Obviously, we're expecting something to happen, which is the rates. So I think gold will catch up, and gold is very fast. It can still move very quick within a day, and it can create some very nice momentum. Unfortunately, we might miss that because it will just happen. Maybe it will relax when we forgot about it, then it will just shoot.
Yeah, no, and that's a good point. I think just to narrow in on what you're saying about gold here, I've got the 4-hour chart pulled up. And I think what you're saying, I think makes a lot of sense. You've had this recent price action downward trend, but generally speaking, I think the fundamentals make sense for upside on gold. But I like what you're pointing out with a potential wait for that breakout on the technical side. So I would say that as you watch FOMC today, if you do get meaningful breakouts the other direction, like strong, above 1990, or perhaps if you're more on the conservative side, looking at like 2000, get us back above 2000. It could be, like you said, now that the market is waiting for FOMC to kind of conclude. Once that's out of the picture, maybe that's where the push higher for gold can take place. So we've had a lot of inflation trend data that has continued, or inflation data that has continued to support the disinflation trend, and that idea should be bullish for gold, in my opinion. So the question will be, like I said, can we get those technical breakout higher on gold as we go into FOMC? So I like that. And to your point about data, this is pretty much it. Today we have the FOMC, and then we have several days where we don't get a lot of market news. So we'll see. I think that could be, to your point, the idea being, okay, well, now that we've concluded the news and we have a little bit of a runway where this disinflation can just kind of settle into the market and the market can trade around off it, I think that leaves some room for gold to go up, and we'll see how that plays out. Now, again, in the audience, let me just clarify something. If you're a newer trader and you hear Kenzo or I be bullish on gold, that's not a certainty. That is not a perfect guarantee that the markets are going to go higher. Nobody knows with certainties what the markets are going to do. Otherwise, we'd all be trillionaires. But the point is, the idea is we look at probabilities, we look at all the data that we possibly can, and we try and make educated guesses, essentially, with good risk management. So I like, Kenzo, I like your idea on gold. Let's see if we can get a break. I like the get above 2000 mark. If we get a pop today on something that is said, something that gives us a little bit of a runway, I'm happy to not necessarily be the first one to buy it. I'm happy to pick it up on a pullback, see if I can catch it there. So good stuff there. What about on the currency trading side? The dollar has been, like you said, the downtrend seems intact. Any specific currency pairs? I have pound USD long. Do you have any trades or things that you're considering on the currency pair side?
Yes, I've been looking at GBP USD, Euro USD also, and the other one, I think it was USD JPY. So yes, I've been actually long on this pairs.
Oh, nice. We got the same trade.
But we have this smaller push. Come again?
We've got the same trade on then. That's awesome.
Oh, okay. So I see that the market is still struggling around this area. So CPI yesterday tried to push the market to go up a little bit, but we saw another reversal. But it seems like the market is creating a very nice support around this area. Maybe I'm expecting the market to just consolidate until maybe around FOMC, maybe before we see a very nice shoot. But I checked, I think this week we also have interest rate from GBP and Euro. So we will see what will happen. But I'm still expecting to see a very nice push on this structure. So on the other one, it's also Europe, Euro USD. I'm bullish, but the market is still very slow. So I'm expecting just to wait and see if maybe we will get a very nice push to the upside. So I've been actually following DXY. So whatever the dollar is doing, I'm just following the trend.
Okay, fair enough. Yeah, I think it's cool to see we both kind of have that idea on pound USD. You mentioned dollar yen. I know that also I did pull up just to confirm. We do have December 14th. That is tomorrow. We have the bank rate from the Bank of England. So you are correct about that. So we should see some volatility on the pound likely to follow, not only today's volatility, but tomorrow with the Bank of England. I wanted to ask you about dollar yen because I know Frank, Frank, he's on the show frequently. Frank is short dollar yen. He shared that inside of our group yesterday, and I think that trade's starting out well. Are you bullish dollar yen, bearish? What do you think on UJ?
Yeah, I'm bearish. I actually had a sell yesterday, but the market is still playing games. So maybe later on we're gonna see the market pushing even lower. I heard you were talking about yen, JOB, Bank of Japan, whatever, trying to, maybe they will be increasing the rates, and other economies are now trying to increase. That can give us a very nice momentum. Plus, besides that, if we go on the technical side, we can see that the market reached the highest level here. Also, this area is the highest level. And since the market touched this area, we can see that the market actually pushed even lower. So there is a possibility for the market to also do the same thing, because you can see the market was coming from the lowest side, reached this level, pushed the lowest side. Maybe it's a good time for us to look for a sell on USDJPY. I think maybe that might continue selling. So yeah, but the market is bit very slower, but I'm expecting that it's because maybe of FOMC. So yeah, we'll just see what will happen later on.
You know, it's one thing also to point out, I think that's very interesting, is if you look at the 2-year yield crossing it against the dollar yen, this is an interesting chart. Generally speaking, these two things move in the same direction. And while I don't have USDJPY short, I've talked about on the stream how I've picked up a lot of corporate and government bonds over the last few months, which in some ways, if you think about it, right, if you're buying bonds, you're essentially shorting the yield on bonds, right? So I did that. I was much too early and also added some over here. So while I'm not necessarily short dollar yen, in some ways I have the same concept by being long some bond ETFs. So I think it's kind of interesting and worth pointing out that the 2-year yield typically moves in the same direction as dollar yen. At least that correlation has held up for, you know, over the years pretty well. So interesting and probably worth mentioning. So in some ways, I do agree with that consensus. That trend seems to be sustained, and I like it in the bond side as well. So should be interesting. I think just a personal opinion, but I think, you know, this has room to fall, and with that yields continue to fall, that would be my bias. And so part of the reason I'm very bullish on indices, but the other part is or my other bet on that is some more conservative kind of bond ETFs that I own in my own portfolio. So
don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.